Okay, so there's good news and bad news. The good news is that lots of people have got jobs. But the bad news for the markets is that lots of people have got jobs because of job numbers came out. The job numbers, more people have jobs. And so the markets reacted. Well, the NASDAQ went down, started to recover now. Bitcoin is holding steady. So that's a good sign. And I wonder if by Bitcoin holding steady, it means that maybe the worst is over for crypto. That's one of the things we're going to be discussing here today. We've also got a very, very, very big show. We're going to talk about the future of Solana. We're going to talk about SPF. We're going to talk about potentially another big player that could fall in crypto and what the implications of that may be. And then remember that portfolio that we made earlier this week, the one that we're giving away 5 of those portfolios. Well, today's Friday, and we are bantering today. And I've got three portfolio practitioners. Okay, so they're qualified portfolio practitioners. That's what they do. And they're going to look at the portfolio and tell us whether it's a good portfolio, whether it's a bad portfolio. So it's Friday. Let's get out of bed, guys.
Get the fuck out of bed, bitch. Go. Get up, and get the guy go. Time to wake up, bitch. Get up. Get up. Get up.
So many of you are now saying you hate the song, it's so annoying. There's another part of you that are saying, yeah, B. Carter says hate the song, so annoying, but then the rest of you saying still loving the intro. So I'm so confused. We're a crypto show. We shouldn't be starting with a guy dancing around in a gown, but we do. Anyway, welcome back, guys. The best community in the world. For those of you who are with us through the night last night, I mean, look, I think the spaces, we're going to talk about the Twitter spaces, but I mean, being here last night was a lot of fun. I have my Sam, my SPF here, so we can talk about that later today. So if you're new to the channel, subscribe to the channel. If you are one of the Banter fam, do us a big favor. Subscribe if you're not already subscribed, like the content. We have an internal goal here. We want to get to 600,000 subscribers by the end of the year. We've got 592,000 plus subscribers. So what we need you to do is subscribe, like this content. Let's get this content out there. Remember, today we've got a massive show for you. We're going to be talking about whether the worst is over for the market, whether the signs are that the worst is over for the markets. We're going to be talking about macro and whether the worst is over for macro. We're going to be positioning our portfolios for 2023 and deciding if Solana is one of the things that we want to have in our portfolios or whether maybe it's time to take the money and put that money somewhere else. We're also going to be talking about one of the big dominoes, another big player that could fall in crypto. And whether Binance is a safe place to be. So it's going to be a big show. It's a Friday. As usual, our Friday is brought to you by our Friday Banters are brought to you by NordVPN. We did have the big MetaMask news. It's actually not really big MetaMask news. And the reason why it's not really big MetaMask news is because it's not new. MetaMask and other providers have been storing your IP addresses for a long time. Exchanges have been storing your IP addresses for a long time. And the one way that you can mask your IP address and you can truly remain anonymous is by using a VPN. Now, I've been telling you guys to use a VPN for a long time. And we partnered up with NordVPN. And the reason why we partnered up with NordVPN is because they are the crypto VPN. They support crypto. They sponsor shows like this. I bring you the Friday Banter. So if you want to get the deal, there is a deal going now for under $3 a month. You can get a NordVPN. And by doing that, you support the channel, you support the channel sponsor, and you actually protect yourself and you protect your crypto. So let's go. All right, so this Friday, we've got Haseeb. Haseeb, welcome back, my friend.
Good to see you, my man.
We've got 2 new guests. Udi Wertheimer, I'm sure you all know him.
Hey, what's up?
What's up? And we got Tom from Delphi. Tom, welcome.
What's going on, guys? Thanks for having me.
Great. Good to see you guys. So listen, there's lots to talk about. I think quickly, let's talk about the macro, because macro is the kind of thing where we have to talk about it, but no one really cares about it anymore. Well, I don't know. Should we care about macro, given that the crypto markets have been smashed so hard and it looks like macro is kind of recovering now? We had Powell come out the other night. I want to just play you a quick snippet from what he said. This is the part that the market celebrated.
After our November meeting, we noted that we anticipated that ongoing rate increases will be appropriate in order to attain a policy stance that is sufficiently restrictive to move inflation down to 2% over time. Monetary policy affects the economy and inflation with uncertain lags, and the full effects of our rapid tightening so far are yet to be felt. Thus, it makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down.
That's the first time that Powell's actually pivoted and said, look, we're going to be a little bit, maybe it makes sense to moderate our increases. Maybe we should reduce our rate hikes from 75 basis points and moderate slightly. And immediately after that, the probabilities of a 50 basis point rate hike in December on the 14th, when the Fed meet again, went to 77%. It was much lower than that. Today, it actually went to about 85%. And then today we got the job numbers. The job numbers were a little bit better. It means that 63,000 non-farm payrolls 263,000 non-farm payrolls were added, which means the economy is not slowing down as much as the Fed wanted it to slow down. Just very quickly, do any of you have any opinions on whether the worst is over for macro? We've had the inflation numbers coming down. I know none of us are macroeconomists, but would love to get your views. Tom, let's go to you.
I just really love Powell's enthusiasm.
Yeah, so here's what I'll say macro-wise. So first of all, yeah, definitely none of us are macroeconomists, so we're all kind of speaking as lay people effectively. But one thing, there's still a lot of capital that's offsides. I think we're kind of near historic highs for institutional capital that's kind of sitting and waiting. There's just a lot of uncertainty in the markets right now. You can see that, just a couple of days ago we had the Nasdaq go up 4% a single day, just on the back of the comments that you recently played. Seeing the strong labor market is tough. I mean, it's one of the things that has to come down for inflation to actually come down within the U.S. But it's also true that monetary policy, it's not a super fine-grained tool. It has delayed effects, especially with respect to real estate and mortgages, because of course mortgages take time to get refinanced at lower rates. So I think Powell's absolutely right that, yeah, you can raise rates and that's going to cause some things to get repriced instantly, but a lot of things in economy just take time to respond to interest rates. And they already know, look, we're at 4% already. So we're pretty close to what the Fed perceives as being the terminal rate. And so I think it's wise for them to take a step back and kind of see, like, okay, what does 4% actually do to the economy before we start, really ratcheting things up and potentially breaking things.
I want to just give you some perspective before you guys comment further. So I saw this today, and this gave me a bit of a shiver. I got to be honest. If you take the 60-40 portfolio, which is the mixed portfolio of 60% equities and 40% fixed income, you got the worst annual returns in the last 100 years. I mean, that's a serious thing. Like, you think about it's not like the last 5 years, 10 years, last 100 years, the portfolio has never returned anything like that. So, I mean, it has been pretty brutal out there, right?
Yeah, I mean, I'm not a macro analyst at all, so I'll probably be wrong. But I think that when you have T-bills at 4.5% and you're able to wire money from Coinbase to Schwab and earn 3.5 or 4% for doing absolutely nothing, that is a massive vacuum on markets. And, I'm not going to take 5, 6, 7, 10, 15% risk if I can earn 4 or 5% for doing absolutely nothing. So until that abates, I think that's kind of the driving force of, people just aren't going to be risk on right now. Like, people are just straight up fucking wiped out. I mean, Terra, FTX, markets in general. And then you have the Fed saying, we're literally going to destroy the markets, take your money out and put it into treasuries. So it gets really hard to get a huge bull case here for me on liquid stuff, other than liquid moves faster than, or crypto moves faster than equities. And maybe we bottom a couple of months prior, but which probably is happening, but I just not comfortable yet because I don't see the catalyst.
Rudy, any views on the macro?
Yeah, I'm the furthest away on this panel from being a macro expert, but I will say that it seems like we've taken so many beatings in the last few weeks that maybe finally the decoupling prophecy is finally coming true. Probably not the way we wanted it to, but it seems like
are continuing. until
Yeah.
morale improves.
Yeah. I mean, you were around. You've been around for a lot of the bear markets, the bull markets. You were around in 2017. I think the quantums here are much bigger. I think the failures are much bigger in size. But I want to remind you of something in 2017, 2018. In 2017 and 2018, when the markets collapsed, the big question was, is crypto going to be a thing? Will crypto survive?
Mm-hmm.
Will anybody ever use crypto? Ethereum is this thing that doesn't really work and has high gas fees, and it had just been crashed by crypto kiddies. And at that point, everyone declared Ethereum dead because an application with cats destroyed it. There were some believers that Bitcoin would work, but I remember going through 18, 19, and even the beginning of 20 going, am I really in the right industry? The feeling that I get now is that everybody knows that crypto is going to be a thing. It's institutionalized, Fidelity, banks, etc., and that this is just a deleveraging and a cleaning out of the riffraff. Now, I know it's very hard to go back to emotion that you felt many years ago, but what do you think has been scarier? Being around in 17 and 18 or 19, or being around now and watching this quantum?
I can tell you personally what has been easier. So it's been easier for me in 2018 to, and before that, and honestly in 2014 too, to see everyone saying, well, Bitcoin is dead, and then crypto is dead, and everything is dead, and it'll never gonna rise up again. For me, it was easy to counter that and say, well, it's not dead. Now it's just not that easy because because that's not what people are saying anymore. So it's a little more nuanced. And I definitely agree crypto is not going to disappear. But I feel like it's not as easy of a bet right now as it was back then. Maybe it will be later.
Are you not more bullish now? Are you not more bullish now? I don't know why, but I seem to be that I'm much more bullish now than I was in 2018, 19. It just feels much easier for me.
I will say that I totally agree with you that I think that it's obvious now that it's not going away. So in that sense, yes. But are we supposed to take some more beatings before we go on? I don't know. We might.
So one thing I'll say, so we've spent a lot of time with our LPs since the FTX blow up, and honestly, if you rewind to a month ago, right? It's been I think it was November 6th that all the craziness at FTX started. If you rewind to a month ago and you told me, amid everything that was happening macro-wise, that we were just about to uncover a massive fraud going on at the number 4 exchange in the world, that this would be a giant black eye for the whole industry, like $8 billion would be missing, Genesis was going to blow up, BlockFi was going to go bankrupt, and ETH was going to be at 1,200, 1,300, and Bitcoin was going to be at 70K. I'd be like, you're out of your mind. Like, of course not. There's no way. Ether is going to 800. Yeah, exactly. Like Bitcoin is going to like 10K. Like this is going to be a disaster.
Slow down a second.
We're not there.
Slow down a second.
Yeah.
If I would have told you a month ago, so what is the day today? Today is this. If I would have come to you on the 2nd of December and I would have said to you, okay, this is how the next month plays out. Sam Bankman-Fried, who's the blue-eyed boy of crypto, well, he's going to be proved to be a scammer. His exchange is going to be completely insolvent. The one who's going to call him out is BitBoy Crypto. So, the one that's going to call him, hold on, I have to play this for you. So the guy that's going to call him out is this guy.
And check all the things that he has done.
No one.
Check.
Where's the evidence? Let's hear it. Where's the evidence? Give the evidence. Give the evidence. This is your moment. Show me an issue. Show me an issue and say that's evidence.
All right, let's go and see, right? So guys, you can just go and check all the evidence posted by Stack XP.
A thread from a year ago.
It doesn't matter whether it's a year ago, right?
Hold on. When you do
Please
this.
go and check all the evidence.
So you're traumatized. You're traumatized. You're traumatized.
Okay, can you let me complete now?
No.
Okay, so the guy that's going to call him out is BitBoy, and the way that he's going to do it is he's going to go and stalk him in his house at the Bahamas, okay, with a camera crew, okay. What would you have said to me on the second of?
Actually, we don't have to guess because I actually had this exact conversation with a few friends before everything blew up, because, you know, there were whisperings about, you know, is FTX going to blow up? And my opinion was that it's extremely unlikely that FTX is a scam, you know, and that they almost certainly have the funds and that withdrawals will probably be processed fine. But so I was, you know, this is a quote, actually. I said something like, you know, I would say there's less than 1% chance that this goes bad and that it's actually a scam. But if it is, we're done. So it's over. We're going to like Bitcoin to 5K and ETH to you know, $200, and it's over. And let's talk again in 10 years. And I agree with Haseeb. It did not turn up that bad so far, you know. So I guess maybe that's a ray of light, you know.
I mean, is that maybe because, as Andrew Kang says, we might have a pocket of retard strength in the market? If a holder wouldn't sell after Luna, Celsius, 3 Arrows Capital, FTX, Genesis, then basically you're not selling.
Yeah, well, I mean, it's well known, and some of us are literally never going to sell, right? So I guess you can call us that.
Go back to your discussions with LPs after FTX, and then Tom, I'm coming to you.
Yeah, so I mean, I sort of expected after the FTX blow up that I was going to go to LPs and they were going to tell me like, what the hell did you get me into? What is this industry? Why did you tell me to buy this stuff? And I assumed, which is kind of what everybody assumed, was that this was such a black eye for the industry that people were now back to the point where it was before 2020, when investing in crypto for an institutional investor was taking career risk. And when institutional investors take career risk, that means they get the hell out. And that's not what we heard from our investors. For the most part, what we heard from investors is like, wow, this was crazy. Like, I'm really glad you guys didn't invest. We're not investors in FTX. I'm glad you guys didn't do that. Yeah, like, we get the crypto. So, like, clearly this is not about crypto. This is about this dude and this like crazy polycule in the Bahamas. But almost nobody who understands the crypto story feels like, wow, well, this is what I was betting on. I was betting on this one guy, this one company, this one thing. And so people, I'm surprised if you see the statements that were made by, Temasek, which is the sovereign wealth fund, that it was one of the largest checks into FTX. They were basically like, look, yeah, we're still, we still believe in blockchain, we still believe in crypto. We're not going to back off just because we did this. And they've done a bunch of direct deals into crypto beyond that. And they're one of the biggest institutional investors in the world. You see the same thing from JP Morgan. You see the same thing from, all of these institutions look, there's some that were fair weather friends. They dipped their toes in and they got bit. I feel bad for all the Canadian pensions because they keep just getting destroyed doing these deals in crypto. But most of them, from my conversations, people are surprisingly thoughtful about how they're internalizing what happened with FTX. So it's a blow for the industry, no doubt, but it's nowhere near as bad as I originally thought it was, in the week of the collapse.
Yeah, I must say, I was at the Solana Breakpoint conference when this whole thing went down. We saw the most incredible developers, the most incredible community, and I saw the most incredible progress on blockchain. Like real world brands, Instagram, ASICs coming in, integrations, bunch of very passionate developers building stuff. I must say, like, I remember I thought to myself, like, wow, I'm starting to feel like early days Ethereum type energy on Solana, which is like, it's quite unique. Like Ethereum had a very unique energy of smart people and money being thrown around and an ideology and whatever else. And I started to feel that. And then I won't forget, we were dancing at the closing party. Ben Boma was playing, and it was like the most incredible. It was incredible. It was the most incredible music and most incredible closing party. But as that was happening, the price of Solana dipped under $30, and this whole thing was unfolding. And I thought, like, is this the closing party for Solana, or is this the closing party for Solana Breakpoint? Yeah. Tom, I'm going to come to you. And I want to say that I know you guys were super bullish on Luna earlier this year, and a lot of the Delphi investments, ecosystem, etc. was in Luna. So you guys have weathered the storm. You guys are fighting back really hard. Interested to understand, your thinking around everything.
Yeah, we had a couple associates at Solana Breakpoint, and it's ironic to bring it up because the messages we were getting were, this is the best developer conference that they've ever been to, and it just was a crazy dichotomy between the amount of dev talent and teams building there, and then seeing kind of Solana, that kind of semi blow up with everything going on with FTX was really kind of tough. And we got on DD calls with a lot of these teams after Breakpoint, and like they didn't really care about this, right? They just wanted to keep building, and we had to keep telling them like, this might be a serious issue for you going forward. And have you looked at other chains, or what are your options? And it was kind of sad to have those conversations to begin with. But yeah, I guess on the FTX stuff, I don't think it's over yet. I mean, you have a lot of teams that had their treasuries on FTX. You have a lot of funds that are just straight up wiped out. Ikigai is one. Like, Travis is an amazing guy, and to see that happen is really hard. And a lot of other funds that happen to too. And that takes a lot of time. I mean, those LPs are not going to allocate to a crypto fund anytime soon, right? Whether they think FTX is a fraud or not, right? Even though it is. Like, those projects are all screwed. Like, they're done. Like, you can't just issue new tokens and this goes away, right? Like, some can, but most can't. And a lot of teams, and then funds also employed a bunch of people who are just going to say, fuck this. Like, I just go back to my web shop. So yeah, I think the shock value is over, but no, I think we have 3, 6, 9 months of like convincing people to come back.
Great. So I want to quickly draw a parallel for you with 2017, 2018. In 2017 and 2018, a lot of projects did their ICOs in ETH. I don't know if you remember that, but in order to participate in the ICOs, you had to pay in ETH, and that was a way for them not to go through the right regulatory process. And then I'll remind you that most projects also thought it was a great idea to hold their treasuries in ETH. And then ETH collapsed, and when ETH collapsed hard. And you can kind of draw real parallels here, because a lot of projects' runways were destroyed in Ethereum, and Ethereum collapsed in 18. And this time, a lot of project runways are destroyed by FTX. That doesn't mean that the industry is over. In fact, the industry rebuilt within 2 years. We had DeFi, we had NFTs, we had everything else. And so the reason why I say that is because for me, it feels like I've seen this before. I think there were some projects that were negligent, leaving entire treasuries on FTX. I think, I think Travis is a great guy. I think Multicoin are amazing people. But when you tell me that 30% of your fund is sitting on a centralized exchange, it doesn't make me feel very good about your level of risk management. And, to me, when you have, unless it's a hedge fund, which is consistently, or quant fund, which is consistently trading, to me, it's like, well, why did you, as a fund who's got responsibilities to LPs, have such big amounts of capital on exchange? Like, we've got to ask those tough questions, no?
Well, look, I don't think it's fair to try to put a trading firm on blast unless you actually know what the strategy was. Yeah. So I don't know that much about what Ikigai was doing, but they're a hedge fund, so it's not strange for them to have a big portion of their capital on a single exchange. It depends on what the strategy was, depends on what they told their LPs they were doing. When you're looking at a fund, the question is, did they tell their LPs what they were doing, and did they follow what they promised their LPs they would do? If the answer is yes, then it sucks. It's unfortunate, but like, everybody who's in the investing industry is in the business of taking risks. One of the most obvious risks in crypto is counterparty risk, which is the counterparty being the exchange. If you're willing to play on, look, FTX, like, I was there with Udi at the same time. That week when I saw the leak of the Alameda balance sheet from CoinDesk, I thought it was a giant nothing burger. I didn't think that had anything to do with FTX. They're like, okay, well, CZ is going to punish Alameda. That's very too bad for Alameda, but who really cares? Like, what does that have to do with anything? And I had no idea that this was coming. Almost nobody had any idea that this was coming. So I don't think even CZ had an idea this was coming. So yeah, I don't think it's fair to point fingers at a fund that loses money on the exchange. Like, I think it's just terrible.
Yeah, I agree, but I just think it's okay. Yeah, maybe I don't have the full picture.
There's another point about teams though, about projects that had their treasuries on FTX, teams that were not supposed to trade those funds, and those funds were supposed to hold them for the long term, for building their business. That's maybe a little more concerning, and there are also there are at least some rumors coming out that in many cases that might have been part of the term sheet for investment from either Alameda or FTX, that they kind of forced founders to have their treasuries on FTX. And if that's true, I don't know if it is, but if that's true, sticky. That's a sticky situation.
I can confirm that we worked with a project that was told to do something similar. I also think what I tweeted earlier this week is I said there's a lot of projects that are telling us that, you know, they had a lot of funds locked up on FTX, and it's become like the excuse for maybe not delivering or not being able to deliver. We had funds on FTX. We're out. Tom, I want to quickly go to you and talk about Solana, because you mentioned something. You said, like, you told a lot of the projects, or you asked a lot of the projects, have you considered building on other chains and stuff like that? Now the dust has settled. I guess we kind of know where we are. We know what tokens are sitting with Alameda. We know that Multicoin Capital, which is one of the big Solana proponents, has taken a bit of a beating and a bit of a hit. And I'm wondering what your views are around the Solana chain now that this dust has started to settle, and we're starting to, like, you know, look at Solana and go, okay, you know, there is a lot of activity. There's a lot of NFT activity. There's a lot of transactions. In fact, it's under BSC chain, it's the highest number of active addresses per day. Wondering what your thesis is on Solana going forward.
Yeah. I mean, honestly, on the question we ask teams, we ask every team the same question. Like, why have you picked this L1? What does this do for your project? Why do you have to be here? Like, we want thoughtful answers, like, on a technical level, not just, you know, we're here for money or we're here because we like the founders or anything like that. Like, so we ask all the teams that question, and they should all have a backup answer, right? You know, we can easily pivot to XYZ, or we can't, or we can, and kind of why. But look, I don't know if everyone agrees, but I don't think Solana's going anywhere. I think they've built a pretty solid ecosystem. I think that they're attracting some really strong people to help build out the next level of the tech side. And I'm honestly not too queued up on what that is, but I mean, having like Firedance around and Jump focus on this and new clients, I think is pretty solid. So yeah, I don't think Solana's going anywhere. I also just love Toli. I think he's one of the chillest founders of crypto, and, you know, it doesn't get discussed as much, but having a likable founder is pretty important. And I think Toli's a good dude.
Yeah, Udi, I'm keen to hear your view. I mean, we haven't really aligned on any blockchain related things. The last time we had coffee in Israel, you were strictly Bitcoin. You told me that there is no need to have anything else off a database other than Bitcoin. I will never forget that. And I tried to say, look, maybe we're early. It's an experiment. We don't know what's.
I remember what you told me. You told me, but Udi, what if self-driving cars would need to be aware of each other? Don't they need a smart contract on Ethereum? And I was like, but yeah. No, I changed my tune since that a little bit, but I mean, you know, I think that Solana is what you would hope is that Solana will be, you know, what Ethereum was in the last crypto winter, and will probably take some beatings, but you know, the community will come out of it strong, and it can be, you know, a kind of a uniting event for both developers and just general supporters of Solana. So you would hope that it will turn out the same way. I would assume that they would need to, you know, probably find someone to buy some soul off of Alameda if they still have it, and, you know, some kind of those kind of things will have to be taken care of in one way or another. It's not going to be easy, but
isn't that
painful for a while? But after that, I you know, I'm hopeful, because I've been to Breakpoint too, and I thought that it's been pretty amazing. I thought that it seems like a strong community, and it's sad that they're going to have to go through this now. But I think if anyone can, it's probably these guys.
So I think the market prices in all the information that's public. And I think public information, everyone knows about this overhang of Solana on the market. Everyone knows what Alameda got. We don't know what Alameda is still holding, but we know what Alameda's got. So I think that's pretty much priced in. That's maybe what took the price from $36 to $13, which is 1/3 of the price of an already, you know, reduced price. I mean, look, I don't know how you guys feel about what's it called? What's the Facebook chain called? The new one, the
Aptos.
Aptos. So, but they've got a pretty much a very similar fully diluted market cap. Like if you look at Solana and you look at Aptos now, there's not much in it from a fully diluted market cap point of view. Aptos maybe good tech. Community-wise, I don't know. I haven't met the Aptos community yet. They're definitely not in the chat. There's definitely not an Aptos army. So to me, it just feels like Solana is just cheap. I don't know. I just can't help thinking that Solana is cheap.
So one a couple cents that I'd put in here. Like, I think it's important to disaggregate when you're looking at a blockchain, because the blockchain, like you throw a conference and it feels like, okay, there's one thing. That one thing is Solana, but Solana is a lot of different kind of sub communities, right? So there's DeFi on Solana. DeFi on Solana has gotten absolutely killed. They got killed earlier this year, even before FTX blew up. DeFi on Solana was really, really struggling. We had the Mango Markets attack. Volumes were going down. TVL was going down. It was already below $1 billion TVL when FTX blew up, going down from a very high base where they were one of the highest TVL chains at the beginning of the year. And then, of course, FTX was the center of Serum, which was the crown jewel of Solana DeFi. And Serum now is basically defunct. In their own words, they're defunct. And they're now moving off. And I think it's going to be very, very hard for Solana to come back with respect to DeFi, because so much confidence in DeFi has been shattered on Solana. Now, that being said, if you look at games and you look at NFTs on Solana, NFTs are still pretty strong. Games, I think, have been up and down. I think there's been a lot of lost momentum there. But a lot of the reason why I think for games in particular it's been tough is because, like you said, a lot of these games are being funded by FTX and by Alameda. And a lot of the games in particular, I've heard from one of the entrepreneurs in my portfolio, a huge portion of the founders that they have seen who have lost money, wiped out because of the FTX blowup, were gaming founders. Because gaming founders don't know that much about how to custody their own crypto. They're much more likely to keep their money on exchanges. And a lot of them, because they took money directly from FTX, it was sort of part of a handshake deal that, hey, you keep your funds on exchange. So that's one side. It's important to understand the difference. NFT people are mostly fine. NFT people are still doing their thing. I think it's never good when prices go down, because all these things are price and soul. But all in all, like, it doesn't really affect you that much, right? Like, NFT Twitter was still NFT Twitter the day after FTX blew up.
Let's just narrow down the discussion and say the date is now 2nd December 2024. Is Solana a top 10 coin or isn't it? I mean, let's just go there and just get to the point. Is Solana still a top 10 coin or isn't it? And I mean, just for reference, we can look at the top 10 coins today: Bitcoin, Ethereum. Let's ignore Tether, BNB chain. Let's ignore you got XRP, Dogecoin, Cardano, Polygon, Polkadot. And
so it's not a top 10 coin right now.
Okay, let's say, is it a top 20 coin in 2 years from now? Is it a top 20 coin?
Man, I didn't realize it was called 18.
Yeah, I mean, Solana has taken a beating. And look, a large part of the reason why this beating is there is not just because, okay, Alameda has an overhang. Like, who cares? Like, the reason why Solana has taken such a beating is that FTX and Sam were so central to the Solana story. Because it's not just about having a charismatic figure either. It's not just, oh, Sam's tweeting about stuff, whatever. It's also about a distribution engine. FTX had aligned itself with Solana. If you were launching a token on Solana, where are you going to get listed now? Who's going to list SPL tokens for some random game, right? Like, FTX was the place where these things found price discovery, where normal retail could interact with the Solana ecosystem. That's just much harder now. And that's being priced into where Solana is being priced as just a pure L1. It's much closer to standing on equal footing with any other L1 of just, how good's the tech? What applications can I play around with? Like, what is actually there on the chain, as opposed to what it was before, which is the number 4 exchange, which is the darling of the sort of the US crypto ecosystem, loves you and is going to do everything they can to make you win.
Okay, so yes or no to the top 20 coin in 2 years?
I would say yes. I think it's likely that they'll still be in the top 20.
I would say yes too. Obviously not financial advice before my lawyers kill me. Steve, you're probably in the same boat. But the other thing that I'd probably point to is, Haseeb brought up a really good point that Sam and Alameda was central to Solana. And the other thing is just like ventures due diligence. Like, when you have a fund that's automatically going to say yes to projects without doing real DD, that creates an ecosystem of projects that really isn't that battle tested. Like, when funds go to projects, there's days to weeks of real due diligence that's going on. Like, what the hell are you building? Why? Who's going to build it? Do you have the money? All these things, the legal docs, everything makes sense. But when you have hey, we're closing this round in 24 hours and your funds have to be on FTX and good luck, that creates an ecosystem of really rough projects. So I think there's some cleanup to be done there, but I do think Solana will be a top 20 coin for sure.
Look, I must say, Chris Berniski is someone that I've always respected in the space. He's written, I know for sure he's written one book, which I read over, I think it was 2017. It was one of the first books on altcoins, if I'm not mistaken. And he's been very active in the space and one of the voices that I really, really respect in the space. And he's comparing this event to Solana with the ETH collapse, or the price collapse of ETH in 2018. And he said, look, he says, strongly believe that Solana is healthier without SBF. With his following, he was raising he was part of raising it relevance, but Alameda became a tumor of the community extraction, which would have hampered network growth had it continued. Now the tumor has been extracted, allowing accelerated healing. That's his view. I must say that
I think that's a little sanguine to say that, okay, Alameda is this tumor. Like, yes, Alameda was extracted, right? They would go on chain, they would farm and dump stuff. They were kind of ruthless liquidity miners, but they were not the only one, right? If you do a liquidity mining program, if Alameda doesn't come and farm and dump, somebody else will come and farm and dump, right? Like that's how markets work. There are enough hedge funds in the space now that it may have been true last year that if Alameda wasn't doing it, nobody would be doing it. It's not true anymore today.
Okay, so I mean, speaking of this, I want to get your views on, is his name Avi Eisenberg or Avraham Eisenberg?
Avi. I think he just goes by Avi now.
Avi, okay.
He's become a main character.
This is the guy who is, he sounds like he's he's an applied game theorist. I don't know what to call this guy. Is he an attacker?
That's amazing.
Is he a stress tester of DeFi? He was the guy that hacked Mango Markets, which wasn't a hack. He claims it was fully legal. He just found a way to manipulate it based on exactly how the contract works. I don't know if you want to say attacked Curve last week. He did something to Curve. Curve went down, Curve went up.
Curve, Aave.
And Curve. There was an attack on Curve where the price of Curve went down to almost
He manipulated the price of Curve. Yeah, manipulated the price of Curve, attacked Aave.
Yeah, exactly. Good thing or bad thing in the industry? I mean, like some people are saying he's stress testing crypto to the max, which needs to be. Other people are saying
it's going to happen.
So
yeah, I would say good.
Yeah, I think it's good. Sorry, I don't know if everyone would agree.
Superhero, legend, or cancer?
Cancer, but you need some cancer, right? If you don't have any cancer at all, then like your immune system gets weak. So it's like
dystopian good.
Exactly.
Yeah.
Well, no. Look, he's an asshole, but it's really important that somebody is out there being an asshole, so you become asshole resistant.
Yeah, Udi was.
Wouldn't it be great if someone did that to FTX?
In 2017, Udi was that.
Yeah, now he got old, and someone else needs to be the asshole.
Well, Udi's still an asshole. What are you talking about?
Out of
When did that change?
But wouldn't it have been great if someone had done that to FTX back when FTX was a 100 million company and not a 30 billion? Like that, wouldn't that save all of us a lot of pain?
Or if someone did it to Luna before Luna got to billions and billions and billions of dollar market cap. So I must say, I see him very much as a hero. I see it I know that a lot of people lost money in the Mango Markets exploit, and I know some people got the money back and whatever else. And I know that in his games, people are losing money, but ultimately I think he's doing a great job stress testing a lot of DeFi applications.
I mean, look, I think like the Mango Markets attack feels very different than what he just did with Aave. With Aave, he gave the entire community a heads up, like very far in advance of what he was doing, why he was doing it. He detailed the attack beforehand. People in the Aave forums ignored him. So I think what he did with Aave was much more fair game. Although, look, very clearly, it seems like he was engaging in market manipulation.
There's a lot of people here who are asking, what did he actually do to Aave? Do you want to summarize it? I know it's quite complicated, but if you want to just summarize it in 2 seconds.
Sure. So long story short, Aave had set a bunch of risk parameters for borrowing and lending assets in the bull market at a time when liquidity was much higher, and it was a lot easier to sell big portions of the large amounts of CRV, large amounts of other assets in the portfolio. So basically, what Aave did, he deposited a bunch of USDC, borrowed a huge amount of CRV, and then basically manipulated the price of CRV both up and down. To allow him to borrow a bunch more CRV against his USDC, and then pump up a bunch of stuff happened. The price of CRV pumped because CRV in the middle of the day, while this attack was going on, they released their stablecoin white paper, which caused CRV to pump, which ended up causing Aave to get liquidated. And when he got liquidated, CRV auto sold on the market into a very illiquid market, right? Like there's not a lot of people out there who are willing to buy CRV as, you know, FTX is blowing up and Genesis is potentially filing for bankruptcy and all this stuff is going on that's scary. So liquidity is very thin. And AAVE, basically, although it's supposed to be over-collateralized lending, if you're liquidating massive positions into an illiquid token, there's a possibility that your liquidation doesn't end up making back the principal. And that's precisely what happened, is that AAVE ended up with $1.5 million of bad debt.
Yeah. I mean, funny enough, that's actually the excuse that Sam Bankman-Fried gave us yesterday on the Twitter Spaces. And actually, I think for one part, he may have been right, because, I mean, when you're operating a leverage exchange and all of a sudden the prices drop down too quickly and your risk systems aren't set enough, just like AAVE, then that's part of it. But okay, let's go to
happen.
No, hold on, I'm not. No. Yeah, to be clear, there's no fucking way that can explain an $8 billion hole.
Let's go to yesterday's thing. And I think I want to just for the record, I want to say
it was the worst thing that I ever heard.
Okay, so I want to say for the record that I sit on Udi's camp here, and I want to say that I think we had the biggest opportunity of our lives on this new media that was not controlled by mainstream, to go out there and really be crypto native and ask SBF crypto native questions that people like Andrew Ross Sorkin and all the others couldn't have asked him and didn't have the technical knowledge to ask him. And I think that unfortunately, you know, it wasn't our spaces. I was just asked to be one of the speakers, but unfortunately, some of the other speakers felt that they wanted to put him on trial and interrogate him like a lawyer, where I thought probably a conversation was probably a much better way.
And not a very good lawyer.
Yeah, exactly. So I think it was super embarrassing, but I do think that there were one or two parts where we scored some victories. I think this was one of them. So
that was not in reference to that.
well, hold on, guys. Do you mind if I go back to just the beginning and just say on the exchange there were spot positions and there were margin positions, but at some point the exchange ran completely out of funds. What happened to the users that had spot positions on the exchange? Because they shouldn't have been leveraged, right?
So, so there are a few answers to that. The first is that there were a number of withdrawals that did happen on the exchange. It is not the case that all of the funds were not available. I think we processed, I want to say something like $6 billion of withdrawals over, you know, a few day period. And so part of the answer to that question is that they were, you know, a lot of those withdrawals were processed prior to reaching the peak of the liquidity crisis and prior to, you know, withdrawals being effectively halted. There are, I think, a bunch of other things going on as well there. Some of which I'm still digging into, some of which I'm still piecing together.
But Sam, let me just
worth noting that, like,
let me just ask you a very simple question. If I'm a user of FTX, I deposited 1 Bitcoin into FTX on spot. I'm not a leverage trader. I just day to day use the leverage exchange. I'm just trying to understand where my Bitcoin is today. Just a little bit of clarity of, like, was that Bitcoin notional Bitcoin on the exchange, but the money sitting on Alameda? Was my Bitcoin used as somebody else's collateral without my permission? I think let's separate the discussion between spot and futures. On futures, I understand that there could have been potentially maybe a margin mismatch, and I hear you, and I'm going to give you the benefit of the doubt, because I think you know, we had some good interactions, and I don't believe that you're an evil person. But I'm just wondering about the spot exchange. And that's people that, you know, didn't give anybody permission to use their money, but that money is no longer there anymore, right? So I'm just wondering, like, where that money could be.
Right. One piece of this is that in those few days following the collapse, we processed about $6 billion of withdrawals, and those withdrawals in general were from a variety of sources, coming from you know, futures positions, from margin positions that were open, and that meant that that there was not a clear that effectively, I think, broke down some of that distinction between the two sources. Again, I'm trying to, I'm trying to piece together all of what happened, and I don't have access to, to put all of it together right now. But my best guess is that was at least a significant part of it.
So the hot wallets between futures and spot were commingled.
So
Why are we just allowing?
Yeah, so it sounds to me like
the hot wallets between futures and spot, those were commingled,
right? That's right. Yeah, in general, balances were treated as effectively fungible with each other.
Okay, no, wait. I just want to with that in mind, I just want to try and understand something. So I put money on, I want to deposit money into FTX. I deposit money into Silvergate Bank, which is United States Bank. I put the money into the bank. That money lands up in Alameda's bank account, right? So now you've got, let's say I take $100, I deposit $100 into FTX. But what I actually do is I'm depositing into Silvergate's account on Alameda, and the account name is Alameda. So now Alameda has $100 of my money, and then I want to buy a Bitcoin for let's say I put $20,000 in, and I want to buy a full Bitcoin. The money is
right.
Tell me where the money's sitting now, though, because this is the part that I'm confused about.
Yeah, I'm not surprised you're confused because it's confusing, and it confused me, and there were a lot of poor decisions made there on our part. My understanding, and again, I'm not 100% confident in all this. I am still trying to piece together all of this, again, without access to data in retrospect. But my general understanding is that, and here you're referring, I think, to the, especially the sort of 2019, 2020 era, where there were no FTX bank accounts, but where some customers were wiring straight to Alameda Research.
Yeah, I'm trying to work out if the money ever left Alameda and was stored in a custodian somewhere else, which really represented a balance on the exchange, or whether there was a money deposited into Alameda, which we'll talk about in a second, and then you just gave me a notional balance on FTX, which was just a digital number on a screen, and you let me use that money to trade potentially notional Bitcoin, because actually I didn't have physical balance on the exchange because the money was sitting in an Alameda account. That's the part that I'm trying to understand. Because that would make sense as to why Alameda had so much money to invest in projects and FTX didn't have any money to pay out to customers, right?
Yeah, so I believe that was part of the story. And again, I'm not 100%.
So I mean, look, I think the Twitter Spaces itself was like, it wasn't great.
That question was good.
That was good.
Gave us some insight that, I mean, if any prosecutor hears that, and the irony is that he has said multiple times that he's speaking against the advice of his lawyers. This is an American citizen speaking against the advice of his lawyers, pretty much incriminating himself. I mean, I don't see any other way to see it. I mean, what do you guys think?
It seems like Sam really misses being a part of the conversation. That seems like the best explanation I can have. Like, I guarantee you any criminal lawyer who is working with Sam is like, shut the fuck up. Why are you still talking? He's had, I think, 3 lawyers now that have dropped him. And at this point, there was somebody who posted on Twitter that apparently like nobody knows who his lawyer is anymore. So which doesn't surprise me. That being said, there's a part of me that also thinks that like Sam, part of what you're looking at right now is like, okay, everybody has been contemplating that Sam is like some 11-dimensional chess player and like he's thought it all through and he's seen all the way to the end game. And seeing what he's doing now, it's like, guys, I don't think that's true. I think he's just being impulsive.
Sorry, Ryan.
Just listen to this.
What are your lawyers telling you right now? Are they suggesting this is a good idea for you to be speaking?
No, they are very much not. I mean, the classic advice, right? Don't say anything, recede into a hole. And it's not who I am. I mean, it's not who I want to be. I think I have a duty to talk to people. I have a duty to explain what happened. And I think I have a duty to do everything I can to try and do what's right. If there is anything I can do to try and help customers out here. And I don't see what good is accomplished by me just sitting locked, in a room pretending the outside world doesn't exist.
He doesn't see the good of shutting the hell up.
Yeah, this is being copied from a couple of tweets I've seen, but I think that he's made the calculated decision in the past to be what Haseeb called like this 11-dimensional chess player. No one understands what I'm doing. I'm a god. And now he's, the scolded child trying to play like nice, like, I'm so sorry. Like, I have no idea. Like, how do you have no idea, right? It just doesn't make any sense. Like all the answers are 4 to 5 sentence hedged answers that don't make any sense and completely go a different route, right? Like if you're the leader of a fund or a project or anything, you know exactly what is going on at all times. There's no way this guy didn't know that Alameda money was used on, that FTX money was used on Alameda, or that FTX people didn't have the money itself. It just doesn't make any sense.
Rudy, I know you said it was an abomination of a Twitter Spaces. Like, any further thoughts on SBF?
I think what he seems to be doing, like the one point that you pressed on is the important point that everyone should press on every single time, which is simply what happened to customer funds. He seems to try to make the point that, we mismanaged risk and things blew up, but that just shouldn't happen. So when you're on an exchange and you might be taking risk, for example, when you take a position on a future product or on a perpetual future, you actually, there are two kind of risks that you take on. One is, the price goes against you and you lose money that way. And the other type of risk is actually that price goes in your direction and you were right, but the exchange eventually can't pay out because you were so right so quickly that the other side just can't pay because they don't have the money. That theoretically can happen. It rarely ever happens. And derivative exchanges have so-called insurance funds to pay out when it does rarely happen. It can happen. And that's a risk you take when you take a position like that. But when you don't take any position, when your funds are just sitting there and you're not in any position, you shouldn't be exposed to the matching engine. You shouldn't be exposed to risk management. You shouldn't be exposed to any of that. That just shouldn't concern you. So when Sam is saying, well, look, the market moved against us, we didn't foresee that, it was more violent than we expected. That's right. That should, that might affect some active traders. It shouldn't affect in any way people who just had funds at risk. So
look, I'm going to say that, look, I wasn't smart enough to ask that question myself. It was actually a question that Eric Wall sent me and said, hey, ask him this question. I was never smart enough to ask a question like that. I want to make it very, very, very clear for the record. Okay, so now the date is 2nd of December, 2024. Solana is definitely a top 20 coin as per you guys. Is SBF in jail?
No.
Tom, we're losing.
Tom, you're muted.
Sorry. I think, so a year from today? What was the date?
2 years.
2 years from today.
I think he's in custody. I don't think he's convicted.
Ready?
Man, I don't even want to answer that. I don't know.
look,
I don't want to speculate on people's freedom. I don't know.
I think the Netflix documentary comes out first.
Yeah, look, Netflix way earlier. I'd say within a couple months. But Elizabeth Holmes was just sentenced like a week ago.
Yep.
And that was 6 years after the Theranos fraud was uncovered. So it takes a long time for anything like this to happen. And to be clear, what Elizabeth Holmes was convicted for was not for creating fraudulent medical technology and selling it to people and potentially killing people, right? What she was convicted for was lying to investors.
That's a good point.
And that's very likely what Sam will also be got for, right? Because look, he claims that he doesn't know what happened. It was a mistake. If you want to convict somebody on a criminal trial, you have to prove intent. You have to prove mens rea. You have to prove they knew that they were doing something criminal. Making a mistake is not sufficient to put somebody in jail for that, but it's very easy to prove that he lied to investors.
That's why he's now on this narrative of I've made a mistake and we made
That's right. I didn't know. Yeah, I don't remember.
What do you guys think happens with Caroline?
That's a tougher question.
Like, that's what I want to know. Does she flip? Does we catch her?
I think Caroline disappears into the ether and she comes in and says, hey, I was only appointed CEO of Alameda very recently, and she just disappears and we never hear from her again, to be honest.
I think what happens is, I think order of events is Caroline flips or disappears, and we know. I think the Netflix documentary comes out, probably a bad Amazon Prime follow-up documentary. And then I think we get the feds or somebody moving on him and the court case starts. But I'm with Haseeb. I don't think he gets convicted for 5 years.
Which movie comes out first? The bad Amazon documentary or the one on, the one on Pornhub, which is man fucks entire nation? Entire industry.
So here's the one thing I will say about Caroline is that I think Caroline, out of everybody involved here, like everybody in the polycule, Caroline probably has the strongest case, because Caroline can say, like, look, I don't know what was going on at FTX. I didn't work at FTX. I worked for this market making firm. I was CEO. We took out a loan. I don't know where the loan came from. I didn't know what was happening at FTX. I didn't have any visibility into that. I gave some FTT. It was, we marked it to market. They gave me cash.
Your Honor, she accepted money that came from her bank account via her bank account to credit fund.
Yeah, so that none of that I don't know. Yeah, it's possible we'll learn a lot more about this in Discovery, but I think of everybody, like everybody at FTX who's part of the central group, right? Like Gary, Nishad, all these guys. I think all of them are going to get the same treatment. But Caroline most likely has the strongest defense because she can claim, I never worked at FTX. I didn't know what was happening there.
Yeah. So, I mean, look, there's one or two good things and one or two bad things. And I want to say good, bad in the context of what happened. Nothing is good. But, the one thing is that we're now getting Bitcoin off exchanges, which is, I think people have woken up to self-custody. But the biggest drawdown in Bitcoin. Now, to me, that's, look, I hate to say it's a positive, but I think that's what crypto was created for, and not to leave it in the hands of centralized players. And I liked seeing this. I hated why, but I like the picture here. The second thing that I really liked was seeing that the DEX volume relative to SEX volume, the DEX volume is starting to go up. So people are starting to trade more decentralized. The one thing that really scared me, though, was look at Binance's market share after the FTX collapse. So it seems like Binance absorbed more of the market share. And now we're in a position where I love CZ. I love Binance. I think it's a great business. Love CZ, great visionary, amazing entrepreneur, good friend of our station. But I don't know, I'm starting to feel a little bit uncomfortable that, like, you got one player who has so much of the industry. And, if it was a highly regulated player in the United States, I would feel uncomfortable. But Binance is a company which is, kind of everywhere. And again, I love Binance. I love CZ, but I feel uncomfortable that in a decentralized world, you have one very centralized player. And the centralized player seems to have scored the most points as a result of the collapse of the biggest competitor that they had, or something like that.
Back in 2014, when Mt. Gox blew up, Mt. Gox back then was the dominant exchange. I think it was like 80% of volume or whatever, by far the most dominant exchange. And so kind of the silver lining with Mt. Gox blowing up was that it gave a chance for a more healthy ecosystem of exchanges. And I agree with you that this time it kind of feels like the opposite. So it mostly, probably Binance seems to be the biggest winner here. And it further solidifies them as the kind of king of exchanges, which is, it is a reason to worry. I don't have anything against Binance, but it's worrying because it becomes more and more of a systemic risk.
Tom, how do you feel?
Anytime. Go ahead, Tom.
No, see, you're on.
Well, what I was going to say, anytime that you have such a violation of trust, you're always going to see a flight to safety. And flight to safety for different people means different things. For some people, it means, okay, move to DeFi. DeFi is safe when centralized exchanges are not. I don't know who else is going to blow, but I know that, on-chain is okay. It means pulling your assets out of the exchange and moving to a custodian. And it means if you're a trader, if you're a trading firm, moving your assets from these smaller exchanges to the biggest exchange. And if you're in the US, that's Coinbase. If you're global, that's Binance. So anytime that you have a breakage of trust like this, it's going to cause consolidation. It's going to cause the strongest players with the strongest balance sheets to win more market share. The question that you have to ask yourself is, like, how long-lived is this going to be? Right now, everyone's scared, right? We're worried about DCG. We're worried about Genesis. We're worried about other exchanges. We're waiting for proof of reserves for a bunch of people. When this is all in the rearview mirror, there's a good chance that you see some of this market share be given back because people are willing to put their money again on some of these riskier exchanges. And people are like, look, yeah, that was bad, but people kind of forget about it over time and they go back to their normal ways. But for a while, for like the next few months, two things that I predict. One is that it's going to be really tough for startups to get users right now because startups need trust. And when trust is very scarce, it's very difficult to attract people and attract new users. But the second thing is that I think we're going to see the opposite of what Sam was campaigning for. If you remember when Sam was going to the CFTC and he was saying, hey, we've got this great new whiz-bang model for doing everything all in a single platform, custody, settlement, clearing, blah, 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 everything all in one. And the CFTC was like, oh my God, this is going to change everything. This is so terrible. All these Wall Street people were so scared. Now all these Wall Street people are like, oh, thank God, that'll never happen now that FTX has exploded. And like the TradFi way of having every single layer of the stack be disaggregated, that is coming to crypto. You're going to have it be the case that to trade on Binance, you will not need your funds to sit on Binance, right? Your funds will sit somewhere else with a custodian that's only job is to custody for your funds. And Binance will just be the exchange. The same way, when you have your money on the NASDAQ doesn't have your money. They do the trade execution, they run the matching engine, but they don't have your money, right? And that prevents what happened at FTX, which is someone like Sam reaching in through the exchange, grabbing your money and running off with it. No trade, the NASDAQ can't do that. NYSE can't do that because of the fact that everything is disaggregated. And so I think you're going to see the same thing happen in crypto. And already I'm seeing a bunch of institutional investors calling for this transition to take place faster than it previously was.
Tom, what are your thoughts?
Yeah, I'm like a mix of both of you guys right now. I think that I'm trying to figure out like what would make you comfortable, Ren, with Binance, right? Like what do you want to see? And I think what I would want to see, and I don't have anything against Binance, but I guess what I would want to see is growth in Coinbase, Kraken, growth in Fireblocks, growth in self-custody, like Haseeb mentioned. I think that's pretty big. Then I would also want to see, I don't know, maybe like the actual regulations come out of the US so that Binance could get comfortable in expanding their US operations maybe. Maybe a shift there would be helpful. But I just don't think from CZ's perspective, he wants to become a US company or corporation because I don't know if you're worth like tens of billions of dollars, you're going to say, hey, come kill me. Like, I don't think anybody's going to say that.
Yeah. I mean, look, as I say, for me, I'm comfortable in the hands of CZ. I'm just not comfortable in the hands of having too much power in one thing. I mean, I probably have some PTSD from, dealing with like too much. Like it's happened to me a couple of times in my life. One is, as you probably all know, Luna was over 50% of my portfolio, my personal portfolio, concentrated risk in one place, got killed. In a previous business of mine, before this, I built and sold one of the biggest or the biggest marketing company in Africa. And we were highly, highly, highly reliant on Vodafone. Vodafone was 60% of our revenue. And I remember the nightmares that I used to have about the fact that, I was reliant on one decision maker, one change in procurement manager, one change in regulation, and 60% of my business would disappear. And just for me, I'm much more a diversification man. And, and I love CZ, I love Binance. They're one of our partners. They're one of our sponsors. So I have to say nice things about them. No, I mean, I said it from, yeah, no, they are one of our partners, one of our sponsors. So really cool people. But I do feel uncomfortable that the centralized part of this decentralized world is becoming more centralized. Guys, we are absolutely out of time. You're all three portfolio practitioners. You haven't even looked at my portfolio, which means we're going to have to do this again. And you guys are going to have to, we'll do a portfolio practitioner show where you can look at my portfolio and tell me just how crazy I am. But I want to thank you on behalf of the fam. Thank you. You're all part of the fam. Thank you so much for coming on Banter. Haseeb, Udi, Tom, thanks a lot, man.
A lot of fun. Thanks,
Pleasure.
Hey, thanks.
And to the fam, hold on, I've got a couple of announcements for you guys. So first of all, I love Fridays, as I said. It's my best show of the week. And I think it's good to have. We've got some new people on, Tom and Udi. Udi's a great addition because I just love his demeanor. I haven't spoken to him for a while, but a great demeanor. Remember that this is brought to you by NordVPN. Now, I need you guys to do me a favor. I made a commitment to NordVPN that I would, after the MetaMask thing, get a whole lot of you guys to sign up because I just think it's the right thing to do. And I'm about 100 away from the number that I promised him. So I need you guys to help me. And at the same time, help yourself, protect your crypto and be anonymous while you're surfing, and just go and pay $3 a month and protect yourself. And at the same time, you're going to help me look good for one of our sponsors that's really, really, really come a long way. They sponsored the Banter Fridays. They sponsored our coverage of Solana in Lisbon. They're just all around amazing people. All you need to do, seriously, all you need to do, just go to the show, click on amazing people. Here we go. Just click on here and click on the NordVPN and just take it out. Come on. Three. I need, like, it's probably under 100. I need you guys to do me a favor. I'm here bringing you crypto love and crypto wisdom. I worked until 4 o'clock in the morning yesterday to bring you that show. And I just need you guys to do one thing for me. And that's what I need you guys to do. The other thing is that if you want to win one of these portfolios, remember I made a portfolio and James made a portfolio. You can download it. The link's on my Twitter. If you want to win one of these portfolios, instead of giving them all away on Friday, I'm going to start giving them away Monday, Tuesday, Wednesday, Thursday, Friday next week. Now, basically, all you need to do is as follows. Go to BYBIT or Bitget. So go to our Discord, join our Discord. That's simple. Go to BYBIT or Bitget, deposit money into your account. You have to deposit money because a lot of you guys were creating fake accounts with bad emails. Go in, deposit money into your account. And Monday, Tuesday, Wednesday, Thursday, Friday, I'm going to give away one portfolio on each day. You can choose whether you want Ran's portfolio or James' portfolio. We'll just put the money we'll just put the portfolio into your account directly. But do me a favor. Go to our Discord, join the Discord, then go join the VIP and just put money into your account over the weekend. On Monday, I'm going to start giving away those portfolios. And hey, that means that 5 people, we say 5 or 10. Let's make it 10. 10 people will have an amazing Christmas with a whole portfolio. Someone says, yeah, Ran promoted FTX a lot. Nonsense. In fact, I've said it many times that we actually didn't promote FTX at all because I didn't like what Sam was doing, and we had a disagreement with him. And I think our lucky angels were actually protecting us. Our lucky angels were protecting us. So, as I said, I don't ask you guys for much. I give of my heart to you guys every single day. I just need you guys to do me a couple of favors. Go and sign up to NordVPN if you haven't done at the same time. Protect yourself. And then go sign up with our exchange sponsors because they keep the lights on here. See you guys again on... Oh, wait. Tomorrow, there is a school episode dropping. Carl's doing a show in the morning. Sheldon's doing a show in the afternoon, right? That's how we did it. So there's 3 shows tomorrow. And then Sunday, I may come and do a show for you guys if anything happens. I'll see you guys again either Sunday or Monday. Until then, have fun. Trade well and look after yourselves, my friends. Was cool, no?